Everybody is probably worried about the war and how it's going to do to our economy and what is going to do to the real estate investments that we have. So, in this segment, we're going to talk about how the war is potentially going to impact our real estate investing and the investment I have here. So, one thing to kind of really notice is that what is the biggest thing on the news with the Ukraine and Russian war is about a crude oil. Everybody's talking about how expensive the barrels are, and etc. So let's kind of get into a little bit deep dive into this particular topic. So let's look at the timeline of the war. February 20th is when the war broke out, and the oil price is around $90 per barrel. It kind of stayed there for a little bit more, and you can see the chart over here. So it took about a week for that news to capture, and I think there's a lot of sentiments in terms of about, okay, is this going to last? Is it just going to be pretending? What is happening? So then about a week into the war, you kind of see in February 28th is when the sharp increases has happened. And March 8th is when it hits the highest point at $123 per barrel. And what is happening on March 8th, right? So March 8th. So it looks like Biden had made an announcement that has boycotted all the goods from Russia in order to support Ukraine. And that's when they said, I'm not going to import any oils from Russia. And that's where that sharp increase is, right? So this is totally related. So, and then on March 18th, you see that actually drops down to now it's about $104 per barrel. Today, what happened on the March 18th is that basically he's now going to open federal lands to temporarily relieve the oil prices. And so you can kind of see our government, what they do, the wars and et cetera, has a lot to do with manipulating of the prices over here. So how does it matter to real estate? And you said, okay, great, crude oil, but how is it related with real estate? Okay, so turns out crude oils is a big part of making of roofing material. So any value-add projects that we have or new construction, now all of a sudden you're staring at a much more increased roofing cost, and we have filled it, in the business that we're doing over here. And also crude oil is energy. The whole entire world, even though there's a great effort, is still very much wrong on crude oil. So steel is hugely impacted by that because you have a huge amount of energies to convert steels and all that stuff into materials, flooring and etc. And also we have talked about Chinese government maybe getting involved into there. So there may be boycotting over there as well. And then flooring, appliances, a lot of stuff is made in China in the whole value add spaces. So how does that impact our real estate investing? That means your margin has just increased. Your contingency needs to be higher. It used to be that you're building 10% contingencies. Now you have to build 20. Now you have to build 30 potentially. And new construction typically comes with a 20% margin because when you're building new construction, there's a lot of fluctuation with material. That's your margin. And so new construction typically a little bit more riskier at this cycle of the market is seeing a lot of that fluctuation, and people are seeing 20%, now even higher construction costs caused by COVID, labor shortage, and now even war. So that could make your new construction projects now profitable, right? Something to kind of think about. So investing it into existing structure is still probably more of a sound strategy. Sure, your appliances may be going up, your roofing may be going up, and etc. But that's still something, because you have an existing structure, you can choose opt to, in some cases, to repair it, just getting over the hurdle until the pricing comes down a little bit or more, or choose to use alternative material, alternative appliances, etc., to replace some of these costs. But when you're new construction, there's not much that you can do. If you have no roof, then all the interior that you have to build just not working. So that's kind of like my reads into the real estate market, which is going to cause the replacement cost increase more from new construction, and therefore increase the gap of value-added apartments. So that potentially also going to push the cap rate to be continued to be compressed in the multifamily sector, and it's going to make flipping costs a lot more expensive. It's going to make new construction of the single family increase. So investing in existing cash flowing asset like apartments, mobile home parks is probably a safer way to kind of moving forward to hedge against it. And if you're buying single family home, maybe now it's a good time to kind of take a pause in it, to look at it, especially if you're buying new construction homes, because that pricing perhaps is going to fluctuate. So today, our takeaways are this. New construction, we're going to see some much larger margins, and there's going to be a upswing of material cost over there, which could maybe creating some ruffles in the new construction. Because if the project is no longer profitable based on their previous underwriting, then some people are maybe going bankrupt. So that's something to kind of really watch out for. And investing in existing structure is probably going to be a little bit safer. Investing in less heavy value added projects is probably a little bit safer bet in this market cycle. So that including Class A buildings, value add Class A buildings, the stuff that you have to touch less. A yield play may not be too bad of an idea, especially if you can get a fixed rate loan debt on that. And then we're going to have another video kind of talking about the interest rate discussions as well. And third is existing structure is still good, and you want to focus on the in-need housing, right? We kind of see in the last recession, the Class A buildings are luxury goods. So if you focus on the need-based housing, workforce housing, essentially the B and C class, that yields are good cash flow that helps you service your debt. This is going to be a little bit safer real estate to investing in versus single family homes that are very largely riding on the value and the material. If new construction has stopped, that could be pushing inventory down even more on causing the pricing going up. But a lot of that is already baked in the consumer sentiments. So single family home is going to be a little bit more volatile. And focus on the entry homes, need housings, instead of luxury housings or, the Class A brand new building of apartment buildings and etc. in our areas of the work. If you like what we do, click on the subscribe button, and we love to hear from you and put your comments in the feedback section.